Right, we've got the chart for oil here. This is the West Texas oil chart, WTO, and we can see the bullish descending wedge which has been forming over many years, of course. And when this broke out around about a year ago, or a little bit just a little bit less than a year ago, I posted this chart with the $75 level marked, area of horizontal resistance there. And then this broader area of horizontal resistance up at around about $100 to $115 associated with these price peaks over here on the left-hand side of the chart back in 2014, 2013, 12 and 11. So some significant resistance is going to be encountered there, assuming we just about push into that area. We pushed through the Ichimoku cloud at a particular weak spot, which is not unusual at all as we broke out through this wedge. Should point out this is a non-log chart. It's the non-log chart for the price of crude oil, because the price of crude hasn't moved in a logarithmic fashion. It hasn't changed by orders of magnitude, so the non-log chart is the one to use. We've got volume by time on the bottom. This is trading volume, and volume by price on the right-hand scale here. So you can see a lot of trading volume down here in this horizontal support zone. Trading volume decreases significantly in this area here, where my cursor is between sort of $70 and up towards $95, which explains why the price has moved quite rapidly through that price range. And we're now starting to encounter the trading volume resistance that's associated with the area around about $94. We've just been pushed back from that level. So it makes sense if we do encounter some resistance here. I'll just put a horizontal resistance line in just to indicate that for you in that area there. You can see the candles on the left-hand side of the chart here that correlate with that. What's going to happen next? Well, we've got the rising 12-month moving average. It's at $74 at the moment, just over $74. It's going to intersect this $75 area and give very strong support down in that zone. So if the price were to pull back here, you'd expect it to stop at the $75 area on the 12-month moving average and the horizontal support line. So one possible scenario would see a pullback to that level and then a move to the upside. Scenario number two would see us reaching the $100 to $115 level fairly quickly without any large pullback or prolonged pullback, and then from that level we'd see some kind of bouncing around either down to this sort of $93 level, or if there's a larger pullback down to the $75 level. But in the longer term, what do I think? Well, I suspect, don't quote me on this just at the moment, but I suspect that after such a significant breakout from this falling wedge, we will be challenging the natural target of this falling wedge, which is the previous highs up at around about $147, I think it is. So at some point in the not too distant future, and it may be post 2024 when because I'm expecting some pullbacks during 2024, particularly the latter part of 2024. It may take until then before we see a larger move to the upside. I'm not entirely sure about that yet, whether we get the move ahead of that. 2024 could see a pullback to test that level, and then a move from that point onwards. So there's a number of different scenarios for the future, and the roadmap that far ahead is a little uncertain. As always with producing these roadmaps, the shorter term is always going to be a little bit clearer than the much longer term. So in the shorter term, the level to watch is this sort of $92, $93 area. If we break above that, then we're on for the $100 to $115. If we continue to be rejected at this level, then a pullback to 75 is quite likely, and that would be how the odds would be stacking up at that point. So I hope you find that useful, and plenty more longer term pictures on many of the markets, of course, are already on the website, and plenty more coming up very soon for our members. So that's it from me for now, and thanks for watching and listening.